Hello traders, this is Rich Derrick from Tradesight. Here's a look at the market. This is our market preview for this coming session, which is going to be for Thursday, April 18th, 2013. One key thing to keep in mind is this is going to be the last full trading session before options expiration for this cycle, which is going to be this Friday. Today we had a pretty negative day for the most part across the board here. We saw the S&P was down 33 handles on the futures, and the NASDAQ futures were down 53. Market internally was very, very weak. And let's take a look at the market charts, and let's take a first look here at the ES futures. All right, so here are the ES futures. This was the previous day we characterized as just kind of a measuring day, where we were just kind of measuring off the decline from the previous session. We did close more or less in about the same area as that low close from 2 days ago, but we did expand the range to the downside. If you see the tail here on the chart, the tail on the chart did interact with the 50 DMA, which is going to be a very important level here, as well as the 50 DMA. This 1531 5/8 level on the GAN box is going to be really important. It was this low back here in early April, and it was also this low back in March. So a couple of key areas here to watch: the 50 DMA and also this 5/8 level on the GAN box. Now turning our attention to the NQ futures. The NQ futures on a relative basis were more weak than the ES futures. We closed below the settlement from 2 days ago, which continues this trend to the downside, and we also expanded the range even more to the downside. Note that we closed kind of in the area of the 50 DMA. These major moving averages tend to like to be gamed when they first get traded. The 50 DMA a little bit less so than the 200. The 200 is usually much more stronger as far as getting down there and gaming it and having a two-sided trade around it before the level is either held or lost. But definitely something to keep in mind. The other thing to bear in mind is the 7/8 level right here in the GAN box at 2773 is very important. It's also the origin of this prior high, which was this little mini breakout for this range. To the downside, we've got support at 6/8, which is 2734. Then we've got key support here, right where this 200 DMA lines up with the active static trend line. So a couple key levels to watch there. All right, now taking a look at the market internals. A couple key developments here. The total put-call ratio did climb again today, closed up about 1.21. Definitely the high close of the year, and it's just below that threshold of 1.25, which is that climactic reading where a reversal back to the upside will be imminent. Usually you get that reversal within 72 hours of recording that, and usually it's very, very powerful. So we're right in that area. This almost is enough. It might be enough. I would feel a little bit more comfortable with seeing that 1.25 print, but this may also be a little bit driven here by options. So we could obviously see the reversal and the release of this oversold energy back to the upside early next week. So definitely be on guard for that. Here's a look at our 10-day trend. While the put-call ratio is very elevated and close to an oversold reading, the 10-day trend is not yet. It's only 1.21. It's got to get up to about 1.35 before we get that high probability reversal warning. It would be very nice to see that high probability reversal warning from the trend also line up with the put-call ratio, but we'll have to see how this plays out. But right now there's definitely some more gas in the tank here to the downside before we get that oversold reading from the New York trend. We've been following the S&P TLT cross, and it's actually starting to get even more interesting. We reached up and hit this trend line here, which we thought would be key resistance, and it was. We've now declined back down to the prior swing low off that original reaction to the downside. We traded that 2 days ago. We bounced, and we're back down to this level again. If we take out this level to the downside, that would be a very bearish development and indicate that traders and institutions are taking risk off in a more aggressive fashion and would really turn this chart negatively. So this is something that we're going to be watching the next couple of sessions. Here's a look at the multi-sector daily chart. All the major averages, all the major sectors were down on the day. The semiconductors and the banks took out the previous low from 2 days ago. The BTK, which is here in red, did not. And you can see that the XAU is accelerating to the downside, showing more and more relative weakness, and certainly must be running out of selling at some point here. Now, as far as the individual sectors on the day, you can see it was definitely really kind of skewed towards the more growth indexes were really hit the hardest. The semiconductors were one of the last laggards here. Oil services were very, very weak. The defense index was weak. The stronger sectors were the things like the pharmaceuticals and the utilities. The more defensive-minded sectors were definitely stronger. So let's take a look at some of the individual charts now. BTK is still waiting and on deck. Is kind of on deck with the 13 exhaustion. Was a little bit lower on the day. Didn't really take out the previous low from 2 days ago with any authority here. This 5/8 level at 18.1250 is definitely important. If that gets lost, then we've got the 50 DMA lining up with the 4/8 level on the GAN box at 1750, which is going to wind up being very, very key support. Moving on to oil services, the OSX. OSX was very weak today, coming right back down to key support. One thing to note here is look where this close is. This is actually a new low close on the move. We still have the 13 exhaustion warning from the seeker right here bearing down on it. If we continue lower and break through this important support here at 4/8, remember the big levels are the 8/8, 4/8, and 0/8 on the GAN box. So if we lose this 4/8 level at 234.5, then we're going to be putting the 200 DMA in play. Semiconductor index was extremely weak today, down more than 3%. It's a very big move. Obviously expanding the range from the low from 2 days ago. Not quite taking out this previous swing low, but definitely not looking very healthy. Got a little bit of support here at 5/8, but remember the 5/8 levels are fairly modest as far as their power goes. The 4/8 level at 406.25 is going to be much more meaningful if that trades. Now looking at the XAU is down again. We're getting down into that frame shifted 0/8 level at 100. This is very, very important support near term. The CCI is definitely still oversold below 200. It's at minus 210 now. So we're still oversold here, at least in the very short term. The only real cause for concern here in the XAU is that the seeker count is so far away from an exhaustion warning, and we're 8 or 9 bars away from even getting an exhaustion warning. And certainly with the velocity of this chart right now, they could do a lot more damage before we actually get there. But for now, this is definitely acutely short-term oversold, and in the weekly time frame, we're actually getting down in fairly deep into the count here. Working on 12 weeks down now on the weekly chart. So within the next 2 weeks, we will have a weekly exhaustion buy, which is going to be very important for the long-term chart. So that's something that will also be on top of. TLTs didn't close at a new high, but they did expand the range to the upside here off that. We're getting closer to some key resistance here at 125 in the TLTs. If we get to 125, we're definitely going to find some resistance here from the 8/8 level. The gold futures, we're again very sloppy today, and I think what we have to look for right now is the next real level of support is the 0/8 level at 1250 in the gold futures. So 1250 is really the key support there. Oil was weaker again today. This is a new low close on the move. Didn't really expand the range to the downside. But what we're really doing is we're still finding support from this static trend line from this initial 9 bars to the upside here. So this just really speaks to the power of the static trend lines off the seeker counts. So we're definitely hanging in there for now. We'll just have to see how long it can hold up for. All right, folks, that's it for this evening. As always, thanks for listening. This is Rich from Tradesight.